Coach Mark, Coach Matt, Tackle today from Tackle Trading, bringing you all of the market action and news. Lots of weakness, pretty broad based right now as we're seeing oversized downward movements in small caps. Matt, let's go take a look at the charts right now. Matt, what stands out to me is just how broad based the selling is. Defensive sectors holding up, everything else not celebrating the Fed's decision yesterday, are they?
No, they are certainly not celebrating the Fed's decision yesterday. And you also had some negative economic data that we'll talk about here in just 1 second. But in general, we're dealing with some downward movements in price here in the market from a pure technical perspective. Let's start with the general read of the RSP. RSP was attempting a breakout. Now you're looking at a little bit of a flag test against that 9 EMA, a really important indicator, the 9 EMA to hold, especially if we're going to have any semblance of a nice continuation pattern going into that breakout against that 172.5 double top against RSP. When you're looking at the S&P 500, obviously a little bit more reflective of the NASDAQ, you're going to see a little bit more general weakness here, and it's struggling at the 20-period moving average on a little bit of a bear stop out type technical pattern. Where a lot of the price action is happening today is in the NASDAQ specifically, as we're seeing a little bit of a downward pressure in price as it is fighting its overhead resistance as well. And so a little bit of an unfortunate negative news day that you were coupled with some interesting technical conversations. And if you just simply think about it, this like resistance is hard to break. Just think about it like that. Well, when you're looking at RSP, you're kind of staring at resistance. When you're looking at the SPY, you're staring at that 20-period moving average working as resistance. When you're looking at the Qs, you're looking at the 50-period moving average working as resistance. Resistance is hard to break the same way support is hard to break. And when you are testing those resistance zones, you want to get some positive catalyst, either from the earnings side of the equation or the economic side of the equation. And the central bank just did not provide those catalysts yesterday to see this continued propelling of this upward movement in price. And then you had, unfortunately, some negative misses on the economic side today that just kind of went in line with the concern about what the Fed did yesterday. And so a little bit of the combination 1-2 punch with technical resistance holding in the same time frame. You got some negative news, was just a little bit of a double dose of volatility here today.
Yeah, absolutely. And there's been a lot of economic news. Obviously, we had a Fed meeting yesterday. And Matt, the J Powell I heard yesterday was pretty much the J Powell I've heard for months and months and months. Data dependent. We'll see what happens. Maybe not quite living up to the expectation that Doves wanted in promising something that he was not willing to do.
Yeah, I mean, simple reality is the Fed didn't do much of anything yesterday. It's one of those chalk reports, quite frankly, where there was some anticipation of the Fed cutting interest rates and probably even more anticipation of them, aligning that September cut. Well, they didn't do that. Does the analysis lead to a September cut? Certainly it does. In fact, that's kind of the base case right now, is that September cut. But the central bank still was data dependent. Maybe not as much data dependency as they were in the past. As Jay Powell says, there's not a singular data point that they're anchoring against. They feel comfortable with where the economy is. In fact, Jay Powell spent a tremendous amount of time kind of talking up the economy, talking about how the lag impact on the labor market, there's nothing too concerning about that labor market data. The labor market's more normalizing, inflation's more normalizing. That was the central bank yesterday. It was basically a repeat of the speeches that we had seen coming into the central bank meeting yesterday. And it was very similar to what Christine Lagarde did at the European Central Bank just a week and a half ago, where she left the door open for a rate cut in September, but she stopped short of actually announcing that. That's rinse and repeat out of the central bank here. So they're still data dependent, not as much as they were. They feel pretty comfortable about the environment that they're in. They feel very confident about a soft economic landing, with inflation coming down to their 2% target over the next year and a half or so. And so the ultimate question is, well, if you feel very comfortable about it today, why not cut today? And there wasn't a really good response to that, quite frankly. But in general, I would say September is a live cut, but they are still being data dependent. And that stops short of what the market wanted to hear. The market wanted to hear clarity on September. JPAL still offered a little bit of data dependency for September. And that's what really kind of the conversation was about yesterday.
Yeah, and I think that's certainly playing into the downward moves we're seeing in interest rate sensitive sector areas such as ARC, small caps, and so forth. And Matt, it set up the data dependent for economic news to have, an impact, perhaps more than anticipated. And we had some economic news came out today. It was particularly weak. And we know in the markets that you can have bad news is good news because bad news means you increase your chances of a cut. That is not how the market is reacting today to what was, unequivocally bad news.
Well, it's because it goes with the concern of what the traders and the investors had yesterday. And the number one concern I want to say that the market has at this point in the inflationary monetary saga is that the Fed is sitting on their hands a little bit too long. And as the Fed sits on their hands a little bit too long, what will occur is that labor market will start turning a little bit more aggressively towards the bearish side of the equation, and thus a little bit more concern on the economic side. And there is I don't want to say there's a general sense by the market participants, but there is a portion of the market participants, and a fairly large one, that believes the Fed is being a little bit too lackadaisical when it comes to this cut conversation. And so it's one of those situations where the participants didn't hear specifically what they wanted to hear yesterday. And then you get that news today that kind of goes in line with the concern with the Fed maybe, sitting on their hands a little bit too much. I don't share that concern, by the way, but there is a general concern in the market for that. And then you get some data today. Initial claims came in above the expectation. JPAL said he wasn't too concerned about the 236 number yesterday. Well, are you a little bit more concerned about a 249 number today? And if that number goes up into 270 next week, and at what point do you get a little bit concerned? So obviously there's some concerning data coming out on initial claims here today. What about manufacturing data? We've seen some concerning manufacturing data, not necessarily service data, but we have seen concerning manufacturing data, couple consecutive months underneath that 50 handle showing contraction type territory there. And so it's just one of those moments today where the market didn't hear specifically what it wanted to hear from the Fed yesterday. And then you got some data today that went along with the overt concern that the market participants had regarding the Fed yesterday. And that was just simply enough, quite frankly, with a little bit of the negative reaction to ARM's earnings, for example, to send the market on a little bit of a spiral here today. But I will say this type of volatility is a little bit easier to handle when you are at resistance than when you are at a support level. You can digest that. You can take the punch a little bit without violating, overall trends and momentum. You take IWM, for example, Mark. It was generally understood that if the market didn't hear exactly what it wanted to hear from the Fed regarding that September cut, that IWM and interest rate sensitive areas of the market would give up a little bit of the gains that it has had since that inflationary report from 3 weeks ago sparked this entire rotation conversation. Well, the rotation conversation's on a little bit of cold water right now. It's on a little bit of ice, but is it dead right now? Well, that is only answered from a technical perspective. And from a technical perspective, you have given up the momentum of the rotationary trade. There's no doubt about that. You gave up the 9 EMA, but you did not give up the pattern, and you did not give up the overall trend as of yet. You have simply given up momentum, but you are starting to look at a little bit of a consolidation type look at the top end of its trend on IWM. And it can be really, really simple when you're looking at these types of patterns here. At this point, when you give up the momentum, you have to recalibrate on some degree of pattern. And until you fight back up into resistance, it's really nothing to see here in IWM until we have a little bit of a shake off this volatility, fight back up into resistance.
Yeah, no, and all of this economic news, and we'll continue to break it down with our pro members continually on a daily basis in the Traders Lounge. But all this economic news doesn't stop stocks from reporting earnings, Matt. Big names continue to report. What do you have for us today?
Yeah, and we're going to do this rapid fire style. Meta Platforms comes in. They were the big name of the day. They came in with a nice little beat against EPS. Revenue also topped the expectation. They increased Q3 revenue guidance slightly, very, very slightly, but a very good report coming out of Meta. Meta still is an efficient beast out there, and there's nothing in their earnings report here that I would have some concern about. ARM, on the other hand, not on the run numbers perspective. They maintain guidance. They came in with beats on both the EPS and the revenue side of the equation, but they started doing some things regarding, shielding some of the data that's coming out from the earnings earnings and ARM. You can't not tell us how many units of GPUs you're going to be shipping. We need to know that type of information. You're not Netflix. You can't not talk about subscriber growth. You're not Apple. You can't discount something. You're not that yet. You have one product and you're not even releasing that product till next year, which means you need to be a little bit more transparent on that, ARM. And they simply weren't. And I think that's a lot to do with their gap down analysis and a little bit of the struggling in the semiconductor space here today. Outside of the big names here today out of Meta and ARM, you also had Qualcomm in the news. I felt they had a pretty decent earnings beat. You had eBay in the news. They came out with an earnings beat as well. A little bit of an earnings from a revenue perspective, contracting year over year, but a beat is a beat. Lam Research came out with the beat as well with an increase in guidance. That's going to be a little bit positive news coming out of the semiconductor space, but it's not going to offset what we are seeing on the ARM technical response to earnings. And then outside of those areas of the market, Eaton Corporation came out with beats. They increased their forward-looking guidance. Pretty good report out of Eaton. That would be Travis Etienne for those tackle traders. ConocoPhillips came out with a 3% miss against EPS. That's pretty normal for the energy space so far in this quarter. We do got some big earnings coming out tomorrow regarding the energy space with ExxonMobil and Chevron. MetLife came out today. You had a little bit of those MetLife Aflac type reports here today. MetLife came out with beats. They did not provide a guidance update either. So stocks in the news here today. It was all about earnings here today, Mark. And obviously, for those of you pro members of Tackle Trading, make sure to come to the Traders Lounge as we not only update that on the actual news, but we're going to go through those technical charts on each one of those stocks very closely, I would say there, Chucky.
Yeah, no, a lot of commodity charts remain in patterns of development right now. We're seeing some pressure in a lot of areas. One thing is gold, right? Gold unemployment report, we sometimes see oversized movement. One thing I've noticed out of gold this week, Matt, as the tensions increase and the headlines increase out of the Middle East, I see intraday price action trading on those headlines. Do you see gold? We love gold at Tackle Trading. Do you also see it as a natural hedge against geopolitical tensions out there right now?
100%, but gold's always been a natural hedge against geopolitical issues out there, and obviously we're seeing some pretty rapid escalation of the Middle Eastern conflict between Israel, Hamas, and obviously the Iranian proxies out of Hezbollah and so on and so forth. And gold is a great hedge against geopolitical uncertainty, inflation, debt explosions. Pretty much
everything
people care about or are concerned about in our world today. And so, yeah, I have a tremendous amount of confidence on gold, and we're finding a little bit of an all-time breakout here, a little bit overextended going into that all-time breakout, but the weekly chart is a beautiful look.
Yeah, it is.
The daily chart can get dialed in a little bit, and it does make sense to kind of see this get digested right around that significant whole number of 2,500. So weekly chart looks like a multiple time frame breakout. Daily chart's a little bit overextended going into that multiple time frame breakout. Daily chart typically needs to get digested for the weekly chart to continue. So you would just be looking for a little bit of consolidation here.
Yeah, check out that price action tomorrow, and check us out on our Traders Lounge, where we do an extended, much more extended version of this for our pro members at Tackle Trading. Great community. Go to tackletrading.com to sign up for a trial. Go to the store tab, give us a shot. Matt, this week has been very busy, but it doesn't end. Tell us what we got coming up in the next 24 hours and send us out.
Honestly, we got some of the biggest 24 hours of this week, quite frankly. I know it's felt like just we've been getting so much information into the market this week, and it has been that week. We were expecting volatility. We've gotten volatility. We were expecting a lot of information. We've gotten a lot of information, but it doesn't stop here. It doesn't stop here. In fact, it becomes even bigger because you get the #1 earnings report of the week, in my estimation, out of Apple here tonight. Amazon, massively important companies reporting earnings tomorrow. Then you get energy, you get ExxonMobil, you get Chevron, Intel coming out of the semiconductor space, DraftKings, Coinbase, a lot of secondary companies out there as well. And then obviously you have labor market data tomorrow as well. So a big day tomorrow. We'll have another update tomorrow. Hopefully you enjoyed these Tackle Today videos to help navigate the financial markets on a day in, day out basis. If you do, make sure to give us a nice little like and share on whatever platform you are watching. And if you're ready to become a pro member of Tackle Trading, it's very easy. You can go to tackletrading.com, sign up for a free 15-day trial, and you can test out all those goodies we love doing with our pro member community. Hope everybody has a wonderful, wonderful rest of their day.